Hello traders, in this video I'm going to show you where price is most likely to reject or spike. Most of the time these spikes happen on CPI, FMOC, NFP, GDP and PMI. Most of the time this happens during news event and so forth. So in this video I'm going to cover everything so that you can at least understand. So let's start with the video. Before we begin, let's answer some few questions that you might at least answer yourself. If you already know, you can still listen. So does support and resistance still works in the market? Yes, it does, but the areas here around these tops here, they won't be as accurate as you see in this illustration. So another thing is that how to find the correct support and resistance levels using a line chart or a candlestick pattern. But in this video we're going to cover the candlestick pattern so that we can predict the future rejection in price action. And also the question that most people ask a lot is that why does the market don't retest the order block or supply and demand zone? Because most of the time you see price coming to your order block but it reverses too early. So this video is going to cover that topic only. So let's move on with the things that we are going to cover in this video. This is what you're going to learn in this video. You are going to learn finding the levels that price action is having a higher chance of retesting or making a spike. Secondly, how can we use these levels to make a better trading decisions? Okay. Thirdly, using these levels to avoid being stopped out too early. So this is also going to help you to put a proper stop loss. The fourth one is that making a smaller stop loss with a huge potential return, meaning that you are going to enter a trade using a smaller stop loss but having a huge take profit level. So that means some trades like 1:30, 1:50 around that area. And lastly, I'm going to give you a full trading strategy with just simple rules. So if you watch the video till the end, you will understand those rules properly. So after watching this video, you will have a better understanding of analyzing the market. Also, you will have a better understanding of placing a smaller stop loss and at a certain area. Thirdly, you'll be fearful of trading news or event. That thing will never scare you again. Like during NFP, you'll be more excited than ever before. And on the fourth one, after watching this video, you will have the patience to at least make proper entries by waiting for the market to give you that entry only. So if you watch this video alone, you will have a full trading strategy with all the rules. So, and also I'll give you some few examples on how to use the higher time frame analysis to the lower time frame to make your entries. So let's begin with the first rule of this video so that you can understand the structure that we are going to talk about. Here we can see that we have two bearish candlesticks. Here we have two bullish candlesticks. I believe if everyone can spot this kind of candlestick pattern in their market, even this one here is pretty much easy. You just look at two price action that look the same. Here we can see that we have a high, we have a high, we have a close, and then we have an open. So you see this here, this candlestick pattern here. We are going to use the close and the open of both bearish candlestick. You see this level here is very important. So meaning in the near future, you will see that price will likely to do something like this. Here, you will see that price is likely to do maybe something like this and then spike to this area here. Sometimes it does not even cross above this high here. And then you'll see that the market will just reject and then shoot to the downside. And also even on this side, you will see that the market will be bearish and then suddenly you see a candlestick like this touches here and then price continue to the upside. But then it doesn't have to always be this easy. So if you spot this kind of thing in the higher time frame, that means in the lower time frame, maybe let's say price is around at this area here, you will roughly go to the lower time frame so that you can at least try to enter the market to the downside. But you have to also do your analysis properly. Okay, you see this two candlestick here, they are the ones that causing your price not to touch your fair value gaps most of the time. You will see them when we move forward with the video. So let's move on with the next example. For those who doesn't understand a fair value gap, is that we have three candlesticks here and then we have this low and then we have this low here, we have this low here. You see this low, this first low, the first one, and the second one here, and then we have this high here and then we have this high here. But then as you can see, this high here and this low here, there's a space in between. Like you can see there's a space in between them. Mostly you will see it like this. Even in here you can see that we have this high and then we have this candlesticks low around this area, and then you can see we have a space in between. This is what we call a fair value gap. This is just a gap. And also in a line chart, you will realize that these wicks here, they don't even appear. We also call this gaps, but we just have to make things simple. We will touch on that when we move forward with the video, but for now I just wanted to cover this fair value gap. I hope you understand, because we're going to use it most of the time throughout the video. So then right now let's move forward with the first example, because right now you already know the candlestick pattern, and then you already know the fair value gap or imbalance. So right now let's move forward so that we can at least put this into practice. So from here we can see that when price is very bullish like this, let's say we are bullish on the side, okay, then we have this bearish candlesticks here. When price is shooting to the downside, if price does not, this candlestick here, you see this candlestick, I'll write it 1. If price does not trade above this open here, price is most likely to come and at least manipulate some highs when price is moving to the downside. Like you can see from here. Let me remove this one here so that we can understand. We can see we are moving to the downside. We are moving to that, but suddenly this candlestick here trades above this high, then the market will continue to the downside. And you can see that, let's say right now you have a fair value, let's say maybe you have your supply zone around this area, supply zone here. You can see that you'll be waiting for your fair value gap to be traded, but then the market decided to say no, and then it reversed around, trading on the open and close of this candlestick here. This is very important, but most of the time you'll see this when you have a fair value gap and then a supply zone around this area. Price is likely to come and trap here and then continue to the downside. Even on the side here, we can still see the same thing. Price did not trade here, it did not trade around this area, but then we have this bearish candlestick, we have this bearish candlestick, then we have this bearish candlestick here. Then suddenly this candlestick appear and trade here on the open and the close, and then price continue to the downside. Okay, I hope that is even more clear right now. So from here you can see that we have a bearish trend and then a bullish correction here. Let's write everything down. This move to the downside is impulsive. Okay, this one here is just a correction, but let's look at price action around this area here. Before price can shoot to the downside, we can see that there is no candlestick that traded above it. You can see it's only around this area here, but price is very far. So from here, if you look closely, we have a fair value gap, and then we have this open and close around this area. That is why you see price action here reacting, and then we can see a move to the downside. Even around this, you see this candlestick here, it traded around this area here, and then it started to shoot low. In the lower time frame, around these areas where price is trying to manipulate this kind of areas here, you will see price action very clearly. So you can still build up your trading strategy based on this thing alone. I already have one, and I'm going to show you like only 2 examples so that you can at least understand them. So right now let's move forward with the next example so that we can briefly understand this concept very clearly in the simplest way possible. So from here we can see that price did not, after we can see that we have a bullish candlestick, we have a bearish candlestick, then the market started to shoot lower. But this candlestick here, the bearish candlestick here, price did not trade on top of it first, but then as you can see, price was shooting to the downside and then it came up. It reacted only around this area here, and then it shoot lower. That's all that you need to understand. And even on this side here, you can see that we don't have a fair value gap around this area. Here we can see we have a fair value gap, but then price, we can see that it reacted around this area here, and you can see that this is just spikes or just wicks. Even around this area here, we can see price was just rejecting. So that's all that you need to understand from this video so far. I hope you at least like understand this concept so that we can continue. Okay, so from here now let's do one example before I can show you like how you can do like to build a trading strategy based on this simple thing here. You don't need to make your trading complicated. So from here guys, we can see that we have a bearish trend and then a bullish trend around this area. We have a fair value gap, and then we can say that if let's say you draw your zone around here, let's say this is your supply zone, you are looking at the market like this to come to this supply zone around this area, above this line here. But then why price did not come and trade here, it reacted around this area and then shoot to the downside. So that means if you are having that problem, you must able to like at least try to fix it. So right now, let me show you what really happened. You can see that we have a fair value gap here. You can see that we have a fair value gap around this area, and then we have the supply zone here, and then let's say maybe this is your stop loss area. But then before this fair value gap around this area, we can see that we still have an open and close here. That is why the market reacted around this area. That's all that you need to at least like try to understand. Even if we try around this area, around here, we can see that we have a fair value gap here, let's say FVG, but then above here we can see that price reacted here. So price does not always come to a fair value gap. That's all that I want to tell you. You can also see that even around this area here, I'm not sure if my line is very straight, but price also reacted here and then started to shoot lower before we can see this move that also reacted around that area. So even here in the lower time frame, here in the lower time frame, you will always find some price action. That's all that you need to understand. So for now, let's move on with the example, maybe the trade setup that you can at least memorize or at least put it down somewhere else. Here, let's say we have a structure like this. We have a lower low, we have a lower high here, have a lower high, have this lows, we have this lows, and we have this highs. Then suddenly the market shoot to the upside, making, let's say, maybe a higher high maybe, but then price shoot to the downside again, making a liquidity sweep. So when price makes a new higher high here, when price returns to this candlestick pattern, make sure that at least you have a fair value gap below, and also make sure that you have your demand zone around this area. Then you will be looking to enter longs here and not here. Yes, sometimes it may still come here, but this pattern here, it won't be even visible enough if you know how to read candlestick properly. But that will be on the next video that I'm going to cover during next month. So let's move on with the example. Here we can see that we are on the 30 minutes time frame. You can see that we have this first candlestick here that made this bearish trend here. Then we suddenly see a correction around this area. So some people will try to sell around this area, but then price will just react here. And then you can also see this is a untested open and close. So we will just put this line here in the higher time frame. Let's say this is your higher time frame. This is the 30 minutes time frame. So then in the lower time frame around this area here, this is where you will be looking to go short. If you don't know how to enter the market, I'll also show you in this video, but I'll put all the videos in the description below so that you can at least watch them before you can watch this one for entries, if you want to build your own trading strategy based on this alone. But you must also have some rules for in case if this strategy fails. Yeah, you just have to find some rules. So for now, here, if we sell around this area, our stop loss, maybe let's say, will be above here, but then our entry will be here. Let's say even here, because price action is around this area, then that means our stop loss is too big. But then let's say we are targeting that is like 1:1 here. So let's say maybe if you want more profit but with less risk. So right now, because we are on the 30 minutes time frame, let's move on to the at least the 50 minutes or 5 minutes so that we can see what is happening here during the price action. So from here in the lower time frame, you can look like to adjust this line here, but for now we can see that there is no adjustment. Price is just exactly where the untested level is at. So from here, because we have this higher time frame line here, that means we can still enter short here. There are two ways to enter short here. Let's say maybe this candlestick is not available, this one here. Let me show you. Let's say this candlestick is not available at the moment. So then you're looking at price to break this high to touch here and then close with a bearish candlestick. But from here, you have to understand some certain rules. You see this bullish candlestick here. Let me just do it for those who are still new from watching this video. We have this is a bullish candlestick, here. Then we have this bearish candlestick. This one is a bearish. because we want to confirm our entry after price has touched this level here, we have to see this bearish candlestick here has to trade above this high here and then close with a bearish candlestick. That is where we'll be looking to enter short here and then put our stop losses here. But what if you want to at least enter around these areas here? So that means you'll be waiting for the market to do something like this and then put your sell limit order here, sell limit order around here, and then your stop loss will still be the same. Why? Is because price has already confirmed with this candlestick here. So the other moves here is just drawdown. So that's all that you need to understand from here. So from here, let's say this is your entry 1, is this one here. And then your sell limit order will be around here. This entry number 2 is this one here. That's all the entries that you need to understand based on confirmation. If you don't trust this high as your stop loss, you can still put it here, but from here it just looks the same to me. So let's see how price action behaved after entering this market. Can clearly see that the market was clearly bearish to the downside, and we can also see some couple of examples how the market behaved. Let's find at least something else. We can see that we have this area here. We're going to talk about this area. We have a fair value gap around this area. You can see there's a space between these wicks here. Also, we will be looking to enter long here. My line and trades. Let me just erase them all. We can see from here if this one, and then from here you can see price action reacted, but it did not come to this one, but it was very close. Even though you are looking to enter around this area, the market will eventually give you a proper trade setup. Maybe because right now we are around the 5 minutes, the market will give you that entry maybe at least in the mid 30 seconds around there. But most of you traders don't have access to 30 seconds charts, so we are going to leave that for now. And even around this area, very close, so most very close. I'll try to put my line very straight. No, it did not. Here we can see that we have a fair value gap around this area, and then price reacted around this area. Okay, that's all that you need to understand. If you continue with this setup here, the market will be pretty much easier for you, and we can clearly see that the stop loss was very small and also the profit was very huge. So let's try another example with a higher time frame. Here we can see we are on the 4 hours. You can also guess this pair. You can comment it in the description below. So from here we can see that we have a bullish trend here, and then we have candlesticks coming to this area here, and you can also see that we have this untested low here. So price is likely to reverse around this area and then shoot to the upside. And then we also have a fair value gap here. Most people will be looking for price to come to this area, but then price will never come to those areas, because what we need as traders is to focus on the current price action. We use this information, but right now we need to focus on this area here. This one is not important anymore because this is just the past. What happened in the past doesn't always make future proof that the market will likely to push to the upside or to the downside. So because we have marked up this area here, we can still move to the lower time frame, which is the 30 minutes or maybe the 15 minutes. But for me, I like to go to the 5 minutes, or maybe it just depends on the day that I'm trading that pair, because sometimes you can move to the 30 minutes but the entry point won't be visible. So that means you'll be moving to the lower time frame, which is the 15 minutes or the 5 minutes, and sometimes I use the 10 minutes too. So from here we'll be looking for the market to trade in this area here in the lower time frame. Around this area we'll be looking to enter longs. And additionally, you can also see this is your minor break of structure around this area, and then you have your higher high. Let's say this is your higher high, a higher low, and then you're waiting to catch the next higher low. This alone, these two candlesticks alone here will be the one that shows you that we have support and resistance around this area. The market is likely to reject here, and mostly you'll see that price is not likely to trade below this low here. That's all that you need to understand. So let's move forward and move on to the lower time frame. Here we can see that we are on the lower time frame, and you can still see that we have a fair value gap, a Fiji around this area here, and then we have this low. Tell me if I'm wrong, if most people will be looking to go long based on this engulfing candlestick here. Yes, they will go long, but where will they put their stop losses? Below this low here, obviously. But because we have this higher time frame line, price was not likely to come and just leave everybody being bullish. So this line here, you can see that price also traded below it. You can see around here, and most of the people will try to enter around these areas here based on this fair value gap, and then they will put their stop losses below, but then this candlestick will always stop them out. But because we are still waiting for the market to give us a proper price action, here we can see that we have this bearish candlestick and then a bullish candlestick, which will create a demand zone. Okay, so that means for now we'll be looking for the market to move to the upside and then at least target this high as your take profit one. That's all that you need to understand from here. So for now, let's look at how the market behaved after making those behaviors in the market. We can see that price rejected and then shoot to the upside. Even though, let's say, you were trying to go long around these areas here, it's because you can see this bearish candlestick did not trade below this. Like, it's like this, guys. We have this bullish candlestick here, we have this bearish candlestick. You see this one here, this low is low, so this candlestick low is around here. So price is likely not to give you an opportunity to win because they already know that bullish engulfing candlestick, most people will eventually buy from it early. So that is why you see price trading below it first and then shoot to the upside. I'm not sure if I can find another example. Let's see, there's nothing I can spot right now, I believe. Oh, there's another one around this area. Let me show you. You can see that we have a bullish engulfing candlestick, and this price action here will just eventually come and stop you out. Okay, that's how it is. It will stop you out and eventually move to the direction that you have already anticipated. What we need is a candlestick behavior like this one here, a bullish a bullish candlestick that trades below the previous candlestick's low here, so that price can shoot to the upside. I have covered that in a lot of videos. You can also watch them. I'll put the videos in the description below. So let's remove everything. This is your entry candlestick here. When this candlestick closes, you put your stop loss here and then you'll wait for the market to shoot to the upside. And yes, this is just a correction to shoot to the upside. So let's move on with more examples because we are not even close to being done with this video. We can see from this area here we have a fair value gap. Here we don't have it, but then from here we can see that we have an open and close around this area plus a fair value gap. So most of the time you'll see that people will just take the lowest fair value gap, but price will suddenly just reverse from the first one. You can clearly see that we have this reaction around this area and then price will shoot to the upside. And sometimes price likes to at least spike to the untested open here. You can see we have this open of this bearish candlestick. Price spiked here and then shoot lower, and also price spiked on the open of this bullish candlestick and then it shoot to the upside. That's all that you need to understand. But you don't have to use this in the higher time frame, so that in the lower time frame you can at least find a better entry. In the higher time frame, just use it for analysis only. Please do that. We can also see another example here, a fair value gap, open and close here, price shoot to the downside. Sometimes it can even be difficult like this, but if you look clearly around this area, we have this high and then we have the open and close. Price never even traded above this high here. That is why you see price shooting to the downside. And I believe so many of you already see so many trades around these areas, but that's all I can say for now. So let's move on with another example. We have the first example here. We can see that there is no fair value gap here. There's no fair value gap, and then we have a fair value gap here. Price was just trading to the upside, and then you can clearly see that we have this wick here. Price is likely to come to this area to fill it here. Price is more likely to come and fill that area. You have to, like, at least in the, let's say maybe in the, what do you call it, in the line chart, the price action from here to here will be something like this. This week here, it won't be considered in the price, in the waveform. Price will just be something like this. It's not even clear, but it won't be like, but this weeks here will be considered as gaps. This is just gaps. That is why the market is likely to come and then fill those gaps here and then shoot to the upside. So that is why you can see here price came to this area because based on this open and close here, because the fair value gap is just above, and you can also see above this fair value gap, price also reacted here and then price rejected and shoot to the upside. Also around this area here, price reacted here and then shoot to the downside. That's most of the things that you need to understand. Even here, price action reacted and shoot to the upside. So you'll be using the lower time frame to find your analysis better. Here we can see untested highs here. Price reacted, and then it shoot to the downside like this. It's pretty much simple to understand. If you go and backtest this alone, you will at least find your strategy like that. That's how you should always find a strategy. And then from here, let's move on to another example. We have a fair value gap here. We have a week. Yeah, price will always try to fill this week as they are considered as gaps. You have to understand that. You can see we have this week here. Price will always try to fill them up, especially this huge weeks like this one here. Price is most likely to come and fill them up. So we have a fair value gap, and then we have this open and close candlestick here. Look at how price reacted around this area. It just reacted pinpoint, and then price also traded below the previous candlestick slow and then close bullish. What do you think? You have a trading strategy right there. That's all. And you can also see it happens like most of the time. Let's see. We have this one. We also have this one. We also have, I believe, if my line is straight, I'm not sure, but we have this one. As you can see, price will always try to do something in between this. And especially if we have this fair value gap here. Yeah, okay. We can see we have this fair value gap here. FVG above, and then we have this week here. And then price shoot to the upside. Price shoot to the downside. Shoot to the downside. And then move to the up. That's all that you need to at least understand. And you can also see it here. Price reacted here and then shoot to the downside. Some of the things here, guys, I didn't prepare them when in the making of this video. I just find them while I'm just recording. So let's move on to the next example. If you're using a line chart here, this is your resistance, this is your support. Price is more likely to shoot to the upside. Most of the time in these areas here, you will find something like support and resistance levels here. You will find them. You will always find them. They will not be clear, but at least try to find them. They will always be available for you around that area. So we can clearly see that we have a fair value gap here. Price around this area just reacted pinpoint. And also look at how price action closed. We have this bearish candlestick. We have a bullish candlestick. It has to tell you something. Let's say, let me show you with the pen tool. You can see this two candlestick, the bearish candlesticks low and the bullish candlesticks low. This one is lower, this one is not. This is your confirmation. You can say confirmation one. Let's move on to the next example. We have this low of the bearish candlestick, and then we have this low of this bullish candlestick. Which one is lower again? This one is not, this one is. So this one will be your second confirmation. When this candlestick close, enter one. When this candlestick close, enter two. Put your stop loss below, and you can see price action did not trade below the first low of this bullish candlestick. I hope you understand me. So then around this area you have this confirmation, and you already know that price is likely to reverse around this level here. You have to understand that this one here is just untested high, and then price shoot to the downside. Even here price traded below after testing it for the first time. That's all I believe that you should understand. Here we can see that we have untested low. Here if price was moving like this, you can see, let's see, you have your analysis around this area. You are looking for price to move, but then it shoots to the downside. Always check this low. And in the lower time frame, you'll find a silly candlestick, same as this one. Even in the 1 minute, that candlestick will be like having a huge something like this. Just avoid and skip and move forward to something that is going to save you. So let's move forward. We have, let's see, we have a fair value gap around this area. Price shoot to the downside. And then above this fair value gap, what do we have? We have this one, this level here. And then we have a fair value gap too. Someone will try to draw their zones here, obviously. And then we have two fair value gaps. Price reacted because this high here is not untested. It's not tested yet. That is why you see price reacting from this area. Even here you can see price reacted from this area and then shoot lower. Even if, let's say, maybe this is your daily time frame, the profit from here is very good. That means you'll be looking to go short and see that, oh, okay, I have this untested low here, the open here, and then you'll try to go long here and shoot to the upside, because you already know that this move here is just a correction and you have a fair value gap here. So that means you'll be looking for the market to at least close this area, and you can clearly see that the market came to this area and then shoot to the downside. We have another one here, the untested high. This one is the same as this one, but this one we are testing the high, even though price did not come around this area. Those kind of rules will be based on separate video, because I don't want this one to be so long because it's already long. So from here, let's look at this example here. We have the tested high. Let's start. We have the tested high, tested high, and then I'll say a minor fair value gap here, FVG maybe, and then we have this level here. Look at how price action reacted when it touches this level. You can see this bullish candlestick has a, let's say we have a bullish, and a bearish. Okay, I'll do something like this. We have the high, the bullish candlestick. Which one has the bullish candlestick, does it have a higher high? No. A bearish candlestick, does it have a higher high? Yes. This will confirm your entry in a bearish trend. In a bearish trend, your rules have to be like this. It has to be no and yes. And then let me just put it clearly, guys. Let's say maybe you are confirming a reversal to be bullish, a reversal to be bearish. So in this case, in a bullish trend, we have a bearish and a bullish candlesticks here. And then in a reversal of a confirmation to a bearish side, we have a bullish and a bearish. You will see then we have here we have a lows, here we have the highs. To confirm, the bearish candlestick has to be, maybe I'll take this as an example like this. Does this bearish candlestick here, the bearish candlestick, does it have a lower low than the bullish candlestick? No. So that means we will say no. And then the bullish candlestick, yes. And then from this side here, we'll use this as an example. Does the bullish candlestick have a higher high? No. Does the bearish candlestick have a higher high? Okay, it's no and yes, no and yes. But if you look closely, here we have the bullish. Let's say this is number 1, this is number 2, and then here we have the bearish candlestick, which was number 1, here was number 2. You can clearly see that it's just vice versa, guys. That's all that you need to at least understand. It's just vice versa. In a bullish trend, the bullish has to say yes. In a bearish trend, a bearish has to say yes, and the bullish has to say no, and vice versa. We can clearly see from here the bullish candlestick it doesn't have a higher high than a bearish candlestick. That is why you see a trend moving to the downside. And you can also see around this area we have let's say maybe a minor fair value gap around this area, and then price tapped it and then shoot to the downside. Here we have the untapped high and then price shoot to the downside. That's all that you need to at least understand. Let's move on to another example because this video is getting too long. We have, let's see, this one did not retest. We are on the 4 hours right now. We are going to make another trade setup. We have the fair value gap above, and then we have this, because sometimes price does not trade into the fair value gap. Price just shoot to the downside very aggressive. Like even from here we can see we have the fair value gap here, even here, but price did not react clearly around that area. Let's look. We see that price is coming to this area, but then what we need to do is to wait for price to at least give us something here. So in the lower time frame, let's look at how this lines will look like. We have the 4 hours as our higher time frame, and then this is your lower time frame. From here, from the rules that I have mentioned, what are you going to do? We know that price right now is at our reversal area. This is the high, this is the line of the open and close. So from this price area alone, you just look at it. We have the bullish candlestick, we have the bearish candlestick. Which one has a higher high, bullish or bear? The bullish one does not. That means it's a no. The bearish one is a yes. And because we have already confirmed with this higher time frame level, so that means price is likely to come and just reverse very aggressively to the downside. That is why you see this bearish trend. I hope you understand me on this one, even though if I'm fast, you can still always rewind this video. So let's move on to the next one. And also, if you like this video so far, please consider subscribing, because I already forgot. And also visit our Telegram channel, Discord, and everything. The links will be in the description below. Let's look at this one here. This is just the example that I wanted to explain. We have a fair value gap here. We have a break of market structure around here. And then we have this impulsive move to the downside, lower low, and then we have this. Let's say this is your liquidity sweep, but then you're still waiting for the market to reach your supply zone, but then price reacted to the downside. Let's just put one line here and see. Look at it. This is very clear, because we already have a fair value gap even here, fair value gap around this area. Price did not respect this, did not respect this supply zones here. Price just reacted from these 2 candlesticks alone. Just one line could build you a full trading strategy. Just one line. Let's look at this area where price reacted. I'm not sure if my lines will be a little bit straight or not, but let's look. It reacted from here, not this one, but here. And look at how price reacted after making. It just rejected and then it shoot to the downside. That's all that you need to understand. I hope this video was very helpful, even though this is not a full trading strategy. Also, don't forget to follow us on Telegram, okay, and then on Discord. And also, if you have reached the end of this video, I know some of you won't please text me on Telegram. I'll send you this full ebook, especially for if you have reached this video, and also if you show me that you have subscribed to the channel. I'll give you this book for free. See you on the next one.